One estimate is that there's a $65 billion gap in financing for agricultural SMEs or small and medium enterprises across sub-Saharan Africa. And there's just this big divide between the availability of capital and the demand. In much of Africa, there's actually a pretty liquid banking sector. There's capital available, but it's not going to agriculture because of the real and perceived risks and the high transaction costs. CSAF is an industry alliance, and we came together in 2012 as peers and competitor social impact lenders. At the time, we had seen what was happening in the microfinance industry, how there was growth, more players working in that sector, but also a lot of challenges. There was over-lending, there were crises, and we wanted to preempt that. We wanted to get ahead of industry growth, to be sharing learning, developing standards and best practices around impact and responsible lending. The data that CSAF collected over the years and that eventually allowed us to make the case to funders for an incentive facility for Aceli, which has emerged out of CSAF, and not just working with the international social lenders, but working with local banks and non-banks and kind of really activating this marketplace. The agricultural lending market has changed pretty significantly. There are many more social impact lenders. That said, most of them continue to focus on a subset of the market, higher value export crops like fair trade and organic coffee or cocoa. One of the biggest shifts that I've seen in the last few years is the emergence of local commercial banks that are interested in serving agriculture. Some of this is coming from pressure from governments, recognizing the risk that countries face when they're reliant on food imports, and Africa imports a lot of food. And so we're seeing with Aceli many more commercial banks that want to participate that a few years ago did very little agricultural lending and are now creating dedicated agriculture departments and hiring a specialist staff and allocating more capital to the agriculture sector. But there's a big difference between a CEO expressing strategic commitment to agricultural lending and the institution being prepared to serve that market. And so translating a high-level vision into a concrete strategy, having the right financial product, having dedicated and trained staff who understand agriculture. And so Aceli's incentives have helped to amplify and accelerate that process. And we've also paired the incentives with capacity building to accompany lenders as they make this transformation. And that's our objective: a more dynamic financial market, a more inclusive agriculture sector, and a strong enabling environment at the policy level that unlocks a thriving financial and agricultural market.